Hello, today is that of a Tuesday and the 13th day of August 2019. My name is Derek. This is the Money Charts channel. Like always, all bets, trades, and of the like. Well, that's within each's own risk and their own reward. And gold is very volatile right now. On the price action board right now, 1,496 and change, up 0.71% for this 15-minute period, just now 2 minutes in. The last 15-minute period, it lost 1.75%. Price got up there to the Fibonacci level at 2:15 in the morning at 1522 and a half after breaking by this established resistance between 1518 and 1520. It kind of had liftoff support in around the area at around 445, hitting a top at right now 1535 and doing so at around 6 o'clock in the morning. But since falling from this resistance level, of course, we can see a very, very, very significant down move. On the hour time frame, it lost 2 and 2/9%, and but resisting amongst that area. And 3 hour chart, it didn't go back and stay to where it came from. Okay, maybe it will in a failed move, but this is most certainly a serious, serious play to fall right through this, fall right through the 18 average of lows. But you know what, though? There's a lot of this empty space, and we're supposed to be resisting around 1522. So it's pretty much doing what it's supposed to do, and it usually pierces extra rather than piercing less. For if it would have topped here, that would have been pierce less, and this is pierce more. 8 hour time frame is just coming down the 18 average of lows here, and okay, well that's still coming back to where we came from in the more bigger, larger grand scheme of things. And we're going to be talking about this as even a more larger grand scheme of things will be 1320. But on this grand scheme of things, 14 and a quarter to 1440. And on the daily chart, well, this move just got to the 18 highs. So the 18 average of lows, even a pierce below would be, of course, into here. But the 18 average of lows is now just breaking this level of resistance area in here. So it's going to keep rising. And those levels right now on the daily, 18 average of highs coming in at 1480 and then 1452 on the lows. And the price action, the lows was 1480, basically a 26-cent differential from where it hit it on the daily. Pretty much an exact hit, technically piercing less, or but by 26 cents though. On the 3 day chart, it's still well extended, and of course resisting clear so far. Some bit of resistance so far, but it's only been a few hours, so it's kind of not normal, or it's kind of normal rather, to have that happen where you just have those fast sell-offs from key levels, and of course fast moves to get there. On the weekly chart, we can see the more bigger level is in here at this 1321 mark because it was monstrous resistance. And it's had a concisive move to next key level since breaking that level on this run. And it got above this level at these early parts of June. So 2 months it's been. And when we look at this via the monthly term time frame, there was an up month previous of 7.96%, but still decent compared to some of these other green candles. Pause month last month, and the pause month netted 0.23, almost a quarter. So far, it's up 6% for the month. I think there's a decent chance we're going to have the best monthly gain at least since 1968. So when I look at this, the best one I kind of see is actually in here at like 18%. What's this one here? This is like 13, and there's been a bunch of those in that area. But even 18%, I don't think is going to cut it because I've already looked at all the up moves from 1968 through 1980. And this is what I came up with. And I guess for me to mathematically calculate this on in a spreadsheet, What I'm going to first do is I'm going to replace the dash with a comma, which I think it's already set that way, but I'm just going to replace that with a comma so that when I put it in a spreadsheet, I can do an easy formula. So I'll select it all and paste it into a spreadsheet. So let's just paste this in, and that'll be an easy fix. And now I'll put a formula. I think the easiest formula will be just do equals the d divided by the c, and I'll get 1 point whatever the move is. And I guess I could subtract it by 1 too. So yeah, I can get the. So we'll do embed mes with the brackets as if it normally needs it. It's not what I meant to do. Okay, let's go equals left column this divided by this. And technically I shouldn't need the brackets because division comes before the subtraction. And let's just make it so it's a bit bigger in font. And these are data levels from the LBMA. There was a lot of 30s. 25 30s. I mean, yeah, I mean, it should break 29.24%, February of 73. But there's 1, 2, 3, 4, 5, 6 of them between 24.94, yeah, 25, and under 30. I can only assume that the numbers from 1980 up to here only a couple and few, and I don't think they'd be. And there was one move I think in the night around 97 or something that might have had an interesting spark that there might be, but I don't see anything here that's like 13% on this move. We have 12% here back in 2011. This green move is 12. We have like 11% here. There really isn't any times where this has had, oh, just amazing, phenomenal month. This, I mean, collectively, we've gone from 432 up to 730, but the month before it was up 12.1. And then here it was up 10 and 4 ninths. And this liftoff one was 7 and 7 ninths. So there hasn't been too many spectacular moves, but I wouldn't be surprised if we may be entering a couple 3 months that are like, wow, just ones that will blow the bulls away, like, oh, and really destroy the bears in the paper market. I like to call it digital market more than anything, but yeah. So that's I found that relatively interesting. But as far as price action is concerned, yeah, same thing. I mean, are we going to find resistance here? Well, short term, we've already been doing so. Most certainly, it's already up to 1497. As I mentioned, this thing has been very, very volatile. This is a 1 minute huge move down to 1479, and it's already rallied like 21 in the gold perspective, 1.1 and this like a cup of coffee. I mean, I know that Bitcoin might laugh at that, but still, it's not bad as far as getting volatility, but we're just working to improve on getting past those 25, 30% numbers because I wouldn't be surprised if we see 40, 50, 80% or even better whenever it's ready to do it, whether it's going to be the month of August, September, October, November, or December this year, or one of the months next year. I don't know. And maybe we'll just continue doing what we've done before 15% here, 12% there, so on and so forth. But I think there's a good chance we could have some big ones as we are basically leaving this consolidation level. So all the room up to this previous high and then the break of the high. You could see some big ones. Now, gold before, when we look at the actual variable in prices, went from $35 to really 800. It was up a lot more. It was up to 800 in the month of January at one point. It just happened to close it at 668. So it managed to have a 20x move without any month north of 30%. And even a 20x move at 1,000, which is pretty much close to its level of support, actually piercing above this level here. Well, that's 20 grand. So it's interesting to see. Maybe it's just uh, a variance of the short-term levels of numbers, meaning it's only been one market in a few months. So really not a large sample size of months, really. To the fact that it hasn't had any spectacular 40, 60% kind of month or better. But we'll see as time moves on. Let's move on to silver, and this is, I think, the best I'm going to get the 1 minute time frame. I'm guessing, and this is SLV 1611 down to. Well, I mean, this is on the SLV numbers, but as far as its loss, like 16 low change to 15 and a half. That's about 4% or so volatility. And the actual one that I normally use actually looks better, pretty good. It normally doesn't because I suppose it's a volatility, but usually when we look at the 1 minute time frame in here, you get all of this type of nonsense. So I was like, ooh, I guess I should just go to SLV, which is why I started there. But yeah, this works out fine. Price action right now consolidating this first move higher from the big sell-off into the 18. Thus, okay, where are we going to break it? Break above this, and maybe we can test some of these areas that it lost from before. Maybe a complete failed breakdown, and then breaking down below this low, a retest of the low we just recently established. But when we look at this on the more longer term, which is basically what I'm here for, most of the other people would be as well. Resistance at this key level, like gold, did not was not found, or support wasn't found as where its resistance was before. Right now, it's resisting possibly in this area of this congestion, which is totally fine. As for, of course, there's going to be a lot of short-term up and down moves. There always is. We did come back to where we came from as far as our July 19th through August 5th resistance. 8 hour time frame, finding support at the 18 average of lows. We can see coming back to this level here as well. On the daily, finding support within the band. And let's just move on quickly to the ones that I care most about, which is the weekly and the monthly chart. And again, coming back to this previous congestion, because this was just an interesting time back in here where it was just chopping, especially on the Canadian dollar as well. I guess I can take a look at gold and silver on that when I'm done with this. But we see it above this on the weekly. Okay, this is the key next bigger areas around 16 US dollars for it to hold based on that. But what I find very interesting about this on the monthly chart is, well, I'll get back to this short period again. But of course, we have this up run from $4 up to this 8, and 8 was the big resistance throughout the 1980s and 1990s. This was a big area, and it got out of it here in 2005. And this $10 level of Fibonacci, it didn't find. I know I don't get the line there, but it got past that, got hit resisted here, came, and then obviously resisted this 20, broke, did not find support here on the way down in this point. But these lines have been doing well as far as the 18 is concerned. Well, leaving it. Well, here we have that sell-off. So how does it handle the sell-off? Well, it stays within the band. So which side's going to break out, up or down? It attempted it May of 9, June of this point here to do it, but didn't do it. Then it attempted it here in August of 2009, and it did because it got to this level of resistance, successfully found support and found a lot of periods showing strength amongst the 18 average of highs, leaving it here in August of 2010, going north of about basically 20, and a straight move up to the 50 level. Not finding very much resistance at all at the 31, maybe for a couple of months, but that was about it. And then finding big resistance here as well. So as far as the 18th census decline, as we can see, there's a battle since the fall. It established support below it at 26, and it resisted the highs here. It resisted the highs here. There was a breakdown, and well, it never got above the highs until April. So there was the first attempt to revert it, which was from April of 2016, and it moved into correctionary phase in September. So 2016 was the attempt to revert the trend. That failed. Oftentimes, for failed moves in one side brings fast moves in the opposite direction. Well, not seeing it here because all it did was come back down to this 14 level. It pierced below the 18 lows a few times, but this was just a flash crash kind of move here. That was like nothing. This was a few months, but Again, overall in the grand scheme, pretty much nothing. Again, that's like 5 months. Great buying opportunities, at least against the dollar at 14. And even against Bitcoin, given that this is 2018, but the better opportunities to buy against Bitcoin was in here when Bitcoin was 20,000. And altcoins mainly were at their big highs. And you know what? We can also take a look at gold and silver against precious metals as well when I'm done this as well, which I pretty much am. But the key point that I want to go over is what we're doing is getting above this 18 average of high. So this is the second attempt during this entire bear market on the long term to attempt to revert the trend back into a bull. For it never was able in 2012 to get above 35 here where it needed to. And then it was just, it couldn't even really resist the 18 highs during the entire decline from the point when it left it. Piercing below it here. Not even close on any of these moves. Then when it did get to the 18 average of highs, it pierced below it technically here and came down. We could see in the February 2016 month. But anyway, that's how this looks. Let's take a quick look against the Canadian dollar and the cryptos next. So silver against CAD. It's stuck in this range, mainly on the long term here between like, well, 19 and a third and 26. Pretty much like the States, up to about 50, but a lot of this is based on the U.S. Canadian decline. For Canada, this is an interesting month here, January 15, up 20.37%. Can you see that in the U.S. chart? We're looking at January 2015, which is right here. Much different chart at that point, but that's because of the Canadian US dollar. As back in 2015 here, this is when it was down 8.7% in 1 month. So we can see that this was, for a while here, the Canadian dollar was worth more than the US. Right now, it's been in the three quarters range or one and a third, depending on how you cross it, for quite some time. Just congesting, really, mainly between 0.72 and 0.80. But generally speaking, if silver and gold are going to go up, I wouldn't be surprised if this does as well, and we start to uh, maybe regain parity again. Either way, for me, as it's actually better for me when it goes down as a Canadian, but it really doesn't make much of a difference at all. Gold against the Canadian dollar, well, the 2015 month here meant gold was up 19%. So there was a spot where, okay, so there was like an 8% decline in the currency in Canada, which meant the US dollar would have, well, it was obviously interesting spot. I actually really tried to figure that out, and I really can't on a fundamental level. But I can tell this on a technical level that this major level of resistance is being broken. Price action was above 2,000 for the first time. So on the daily chart there we can see it's managed to get above it. Single hour. Got above it here for a bit, but I guess you could say it got above it for the second time now, I guess. But it got above 2025 for the first time, now at 1978. Against Bitcoin, we'll do 100 gold pieces would be, or yeah, 13 and a half Bitcoin for 100 gold pieces. Yeah, that's the ratio. It used to be like 500, and then it used to be six and a half, and then it used to be 38. So there's a lot of extra price differential in price movement and volatility. It's really Bitcoin controls this market. It's not gold. Gold could go up 30% or have 20% down months, and it might show in the monthly candle, but the overall general direction is going to be based on Bitcoin's volatility. I don't think there's too many scenarios where Bitcoin or gold goes really well high to the upside, and so does Bitcoin, and this doesn't go down. If Bitcoin goes up, this goes down. If Bitcoin goes down, this goes up. I had a comment asking about doing charts inflation adjusted. Right now, the easiest way for me to do this is take the data of the national debt. I can just copy this, and now I can do gold divided by this, and I can get a chart this way. Of course, that's just zero point 0.00. I'm just going to have to times a whole bunch of numbers like this just to get an index value. And then this is a way where, okay, there's more of an inflation adjusted barrier. We can see here with gold, it's just attempting to end this downtrend that it has been in this case in here. And then we could do silver divided by the same thing again as well. Might as well multiply it by a bunch of zeros as well. Still, we can multiply it by more. And amongst this, we can just see that we're just in this lowest areas levels in here. So if anything, silver adjusted for inflation is, I would think, at all-time lows. Uh, I mean, I guess that everyone would have a different verdict amongst it. A move in here is 345 or 350. Well, to get there now, a 10 times move would go to 760. So 370, 360 is a little under 5x. And at 17, that would be like 85. So there's been a decent amount of extra amount of currency or the debt census point, whether you do this by the inflation rate, however, which one you use. The money supply, I can do it by the M3 stuff, M2 supplier. I could do silver divided by, what is it, M2 money stock. And I probably want to multiply this again by a bunch of numbers. And this one shows a lot of the similar thing. Again, we're using variables that are maybe a little bit of, have just sort of like words like big. I mean, how do you define big? Like, big's a term of or not speculation, but like it's different for each person. And I mean, these numbers are just, yeah, they're tough to really state as, oh, they're really the best ones to use. This is a good index number. But what's obvious is that the prices, when you look at the amount of currency that have been put out, are still very, very cheap. At least I deem so myself. Thank you for tuning in and have yourself a great day. Bye bye.